to do a brief video on Carmax. That's KMX Stock review. And we've got a daily chart up here for Carmax for you with a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. We can see Carmax went into a bear market around December 21. It's been in a bear market ever since. It rallied up close to the 200-day moving average in the middle of August, and then it's just tanked from there. We can see that it has tremendous respect for the 20-day moving average, essentially all the way down, and especially right now it's really bouncing off the 20-day moving average as it tries to rally out of this bear market, and it's getting nowhere. And of course today is just a complete disaster. Today's the 29th of September. Put in a low earlier at $66.02. It's trading down $20 today, 23% on shares of 10 million. Their normal volume is about 1 million shares per day, trading about $65.79 today. So it's just a complete disaster for Carmax today. I haven't followed fundamentally what's going on. It's not my area of expertise right this moment. I know about it, but I don't follow it. But from a technical perspective, this stock's not doing well. Let's take a look at the weekly chart. We can see we had a ton of oscillation around the weekly chart up until the middle of August, and you can see now it's in a full-blown bear market on the weekly chart as well. So at the end of the day, support doesn't make a whole lot of difference right this second for this stock. The next level of support's down to $37.59, but it doesn't make a whole lot of difference right now because this stock's it's just in major sell-off territory right at the moment. If we look back at the daily chart and we try to make some kind of analysis of what we think is going to happen, the reality of it is this stock has no support until it gets significantly lower. So the basic rules in the markets are that gaps get filled. So we have this tremendous gap here, and that gap's going to probably get filled. Gap from $82 down to about $66 in this stock. So that gap's going to probably get filled. The question is when, and right now there's just no way to tell if there's going to be support coming in on this stock. If you take a look at this stock and its sell-off, this is the first time it's done this huge sell-off to the bottom, this huge gap, and just a complete falling away. So my best analysis of this is we will catch support in here probably right around the $59, $58 level. It's hard to say when that'll happen, but my best guess would be probably by the middle of October you'll catch some support in the mid-50s to 57, 55, 57, and you'll get a rally. But the question is, what's that rally going to look like? And my best guess is you're going to be really hard pressed to even fill that gap that I showed you earlier, which is starting at about 80. What is this here? This gap's going to start at about $82. So I don't think you're going to get a rally from the mid-50s back up to 82. It's going to be hard to fill that gap right at this time unless we get an immediate rally from where we are. So I think we're going to go lower the stock, probably down to 55-ish, and then we'll probably consolidate and go sideways. Keep in mind, we always have to pay attention to the 200-day moving average, and it is really, really far from that. So as you can see, it works its way sideways and then comes up to it. You can expect that kind of behavior again, but you're talking about a lot of time here on this stock. It's really, really tricky to try to make an analysis of stock right now because it looks like it's just so oversold that a rally is inevitable, but it's hard to say where you're going to catch support. So I'm going to just go ahead and say we'll catch support probably somewhere, for entertainment purposes only, around the 55 level, rally back up to around the 70 level, and we're probably going to do some sideways movement just like we did here back from April all the way through to the middle of August. We're probably going to do some sideways movement to get us closer to the 200-day moving average, which is probably going to happen in early December. That's my best guess right now for entertainment purposes only. We don't follow Carmax at rbmresearch.com. The volume's too low, but we do cover 190 stocks with algorithmically generated prices every morning before 7 a.m. We have 1, 5, and 20-day prices. You can see today almost all these are zeros because it did not consider it to be a good day for buying stocks. Let's go down here and take a look at the S&P 500 on our trend following system. You'll notice the S&P 500 E-minis, it has a short for the S&P. This is a 30-day trend following system, uses sophisticated algorithms with moving averages. The other ones up here are just straight non-trend following. But you can see that we have shorts on every single one of them: Apple, Tesla, Ford, General Electric, and so forth, the airlines. So it's not a great day according to our algorithms, which is consistent with what we've seen today in Carmax. You can get access to all of this every morning at rbamresearch.com by 7:30. There's a link in the description below. Absolutely no cost, no credit card required to see the entry prices for 190 plus stocks, the major forex pairs, BTC, crypto, and the most liquid futures contracts. I will check and see if we're going to add Carmax, but the volume is very low normally. Today's an exception for Carmax. Again, rbamresearch.com, link in the description below. If you like this video, please click the like button. If you want to subscribe, please do that as well. Keep in mind that everything you've seen and heard on here is for entertainment purposes only, including our entry prices. Can't use our entry prices or opinion for anything other than entertainment. You should always trade with your own analysis, and you definitely trade at your own risk. If you have a comment, suggestion, or any type of feedback, please leave it in the comment section below. We'd love to hear from you.